Good afternoon, everybody, and welcome to Credit Chat. I'm Rod Griffin, Senior Director of Consumer Education and Advocacy for Experian. Breezy 7821, thanks for joining him. I'll never queue up with you guys. Brewerman 777, thanks for being here. Ariston, thanks for joining. If you have questions about credit reporting and credit scoring and fraud and ID theft, especially in the time we're in now, please ask. I'll do my very best to answer. Bloco03, thanks for being here. Ms. ZD4, always great to see you. It's a strange world we're in at the moment, so I'm sure that we're all trying to deal with everything that's going on and keeping our hopes and our spirits up. And we want to make sure we do that, make sure we take care of our families, make sure we're taking care of ourselves. I think that's most important. See if I can mess up my lens here while I'm at it. But thanks for being part of the chat today. And if you have questions, please ask. There's so much going on. There's so many things that are changing along the way. We're getting some really good questions from other places. Penny Monique, thanks for joining. Good to see you. Please don't be shy about asking any questions you might have, because if you have a question, I know others do too. We had an interesting question that came in this morning and around what happens with tax liens. So particularly in state taxes, if you're unable to pay your taxes and your credit report. And the good news there, here's a bit of good news and everything that's going on. You don't have to worry about that affecting your credit reports or your credit scores. So we do not report or include tax liens or tax payments in a credit report in the U.S. So you don't have to worry about that. Not that you shouldn't pay your taxes, but it's something that won't affect credit scores. We actually removed all tax lien information, I think it was 2 years ago now. So no longer part of a report. An interesting question that came up in relation to what's happening with COVID-19 and all the things that we're going through. Penny Mooney, can you get a secured card with an open Chapter 13? Potentially. It's a great way to start rebuilding your history, because you're opening a savings account with a credit union or a bank. And as a result, they're secured. They are the ones that are being secured. That's kind of the interesting thing to me about calling it a secured account. It's not you that's secure, it's the bank. So if you are unable to pay the charges that you make with the credit card that's tied to that savings account, the bank can remove funds from that account to secure their losses, to make sure they get their money. And then they report the late payments to your credit report, because it works just like a standard credit card. So I think the answer is yes. Talk to your credit unions, talk to your lender. If you can deposit savings in a secured account, they may issue a credit card, and from there be able to begin to build that credit history after bankruptcy or while you're going through that process. Always talk about bankruptcy and what are the best ways to start to recover. And one of the things we always recommend, but can be hard to do, is keep an account open as you go through bankruptcy. So don't include all of your accounts. Have just one, maybe two if you can, that are open, and with zero balance, make a small purchase, pay it in full each month. So you're showing a consistent history with that account, which will help you then rebuild that credit report and begin to establish your credit scores again after bankruptcy. And as bankruptcy gets older, the public record, which is the only public record now in credit reports, it will eventually fall off the report. But even as it ages, it will have less effect. So if you can have that account open, it will be helpful. What happens if you're late on your payments? So one Chef Bobby one, I think probably in reference to what we're going through now with COVID ID, talk to your lenders, and they have resources now available to them to put any account in forbearance or deferment and report that account as in forbearance or deferment to Experian and the other credit reporting companies. Doing so will ensure that those account payments are not reported late. The CARES Act, which is governing what we're doing as in relation to credit, what lenders must do, says that if they're reporting as they're supposed to, the people's credit reports should not be, and scores should not be negatively affected, because they should be working with you if you're affected by COVID-19 to report those accounts as in forbearance or deferment, and make sure that your credit history is protected, especially as we go through things like massive amounts of unemployment. My own family, I have a daughter who's affected, actually I have two daughters, who's affected. One works for a school district, so she's not employed now, although the school district's treating her well and paying salary through the end of what would be the end of the school year. So she's lucky. Another daughter who works at a dentist's office, and they've been wonderful to her, but they're unable to continue to work. So she's going through that whole process. So we're having that conversation in my house and my household as well. I'm trying to make sure we're helping her family. So really difficult times, but make sure you're talking to your lenders because they will report that information if your payment's late. Now, if you're affected by COVID-19, and they should be able to work with you. If you're still working, fortunate to be employed, should continue to make those payments on time. The account should be reported accurately. It should show whether your payments are on time or late. So if you're not adversely affected in terms of employment or income reduction, it's your responsibility to continue to make those payments on time just as we would otherwise. And they should report them accurately in that way. So that's why it's important to talk to your lenders. They're the ones who report to us. They're the ones who work with you directly and know whether or not you're being affected and have to manage their accounts and their account information. So it's reported to us accurately too. So it takes all of us and we're all working together. So talk to your lenders, get your credit report, talk to us as well, and make sure that we know exactly what's going on. You can dispute information if you believe it's inaccurate, and we'll continue to do that, go through that as well and maintain those responsibilities, of course. So it kind of takes everybody, but talk to your lenders, and they should be able to help. Will this include child care payments? That I don't know. I think there are some, depending on your state, I think it's going to be state level. There may be things around this, and perhaps federal level around stimulus as to who receives the stimulus. If you have joint custody of your children, for example, or one parent has custody, the other does not, could be affected in terms of child care. We do not report child care payment unless it's delinquent. So the child care, the courts would report that to us, or the state agency responsible for those child care payments would report to us if a parent is delinquent, and usually seriously delinquent to the point it's in collections. So generally, if you're able to make those payments on time, make sure that you do. Obviously, not a very informative statement, but do, if you can, work with and contact those agencies, the agency that's particularly responsible for your particular payments, and they should be able to tell you what their process will be in this time, because it's going to be like everything else. I think it's fluid at the moment, and we're all still trying to figure out exactly what's going on, how to help everybody, because it's one of those things where the ball keeps moving. So we're trying to help, but talk to those agencies. It's one of those things, being communicative, talking to everybody is going to be important. I talked to them. They want to remove the late fee. So yeah, excellent. I mean, I think that's what we'll see a lot of, and that's what I'm hearing from people is that lenders are working with people and their customers, because they want to support you. They want to keep you as customers. They want to do what's right. We're working with people and lenders and other businesses because we want to make sure that you're protected through this as well, and that we're all working together, because none of us have ever been in this situation. So, we're all continuing to work together and evolve and change as we go. Everyone should only have one credit card. Don't fall into the debt hole. Tasman 87. I think, and that's a question I get. How many credit cards should I have? And my answer is, well, it depends, which is my answer to every credit reporting question. Because what I would tell people is this: if you can manage a credit card, it's good to have one, maybe two. You don't need more than that, but it helps improve your credit scores a bit faster, because you decide how much you're going to charge each month, and you decide how much you're going to repay each month. So if you make a minimum purchase, pay it in full, fantastic. That's the best thing you can do for scores. You have that activity there. It's going to help build that history. If you are but your choice is then also to max out the card and pay only the minimum due, or not pay at all, which would be the most negative thing. So there's some free will associated with credit cards, because you decide how much you're going to charge each month. You're going to max it out, make a minimum purchase, and you decide how much you're going to repay each month. You're going to pay the minimum due, you're going to pay the balance in full, or somewhere in between. So that gives a bit of insight, more than an installment loan where you're told you'll pay this much on this date and for this long until the loan is paid off. This doesn't mean you have to have a credit card. but it can help a bit. But I also tell people, if you know that your personality will not be conducive to managing that account well, meaning you'll get yourself into trouble, you'll be tempted to make charges you can't repay, maybe you shouldn't have a credit card at all. You don't let a credit score and a potential small benefit to credit scores cause you to make a poor overall financial decision. So know yourself as well, and make decisions based on what you know about yourself and the way you'll be able to manage that debt. If you can manage the accounts well, good to have one, maybe two, but it's not absolutely necessary to have a credit card to have a great score. And banks, Tasman 87, I don't think banks want you to be in debt. They make money by making loans and you repaying them with interest. So they want you to be able to repay any debts you have. What I always tell people is credit's the financial tool, debt's the financial problem. And if you use credit like businesses do, credit's actually a fantastic financial tool. It can save you money. It can help you invest your cash while you use the bank's money to actually improve your financial well-being. So meaning what businesses will do is invest their cash in their business or in markets where they can make 5 or 6 or 8 or 10% interest or returns on those investments. Not so much these days, but in most times. And they'll get a loan to pay for capital improvements, for example, or if it's a trucking company, they may use credit to buy trailers, but they're borrowing the money at 3%. So their money that they're investing is earning 4 or 5 or 6 or 8 or 10%. While they're only paying 3%, they're making money by using credit well. You should think of it that way as an individual too, as much as you can. But at the same time, if you have, for example, a credit card we were just talking about, and they offer cash back if you on your purchases or discounts on your purchases, and you use a credit card to make all of your purchases in a month, you get the cash back for that, then you pay the balance in full. You're not paying any interest. You're not paying any fees. Maybe there's an annual fee, but if you're earning more in your cash back or savings, it can make sense. Now look at it as a business proposition and use credit as a financial tool. Use debt debt's the financial problem. And today as well, had questions around how to use credit now, or should I use credit now? If you are going through a financially difficult time as a result of COVID-19, you should make sure that you understand what's available to you in terms of stimulus payments, in terms of unemployment resources, because there are changes there as well. Make sure you're taking advantage of the resources that are available to you. But at the same time, if you still have a gap that needs filled, maybe credit is the right thing to use. Weigh your situation. It might make sense to take on some additional debt to get you through this rough patch, as long as you have a plan to repay that debt once we are back on our feet and the economy's going again and you're back at work, so you can pay down that debt. Yes, your scores might go down a bit or maybe even significantly, but that might be a worthwhile trade as you work through this time. So make decisions based on your overall financial situation and circumstance, not on only a single factor, and certainly not just on a credit score, because right now may not be the time to be applying for new credit, but using credit as a financial tool to get you through a difficult time might be the right point. So look at your situation. Is it true that credit unions cannot charge insufficient funds fees? I'm sorry, don't know why the dog suddenly barked, but here we are, real life, working from home. Happens. Is it true that credit unions cannot charge insufficient funds fees? No. So lenders may. There are options available to you. So you can opt out, and they could charge. You can overdraft. So there's overdraft protection that's required by law that gives you a choice. So you can lenders, including credit unions, can block a purchase if you have not opted out and said, I want my purchase to go through if you reach your limit, and so if you're overdrawn or gone over the limit, they would stop it, or you can opt out. They could then allow that purchase to go through, but you'd be responsible for making that payment and making sure the money's in the bank. It's responsibilities on you. So be aware of that, but they can. My score's 793. Experian Online suggested could be better if I got 2 more. Me, Moshel, and my voice is trying to go out on me. I've been talking a lot. So that's a really good question. If you are desperately chasing a better score, just because you feel like doing that, and you get 2 more cards, your score might go up. You'll probably see it go down initially, but give it a few months and you use it well, your score might go up. That said, a 793 FICO score, if you got it from Experian, FICO 8 score, is a very, very good score. So if you're not planning to use credit, you're fine. If you're going to apply for credit and you go to the lender and you show them a 793, they're going to say, how much do you want? Within reason, of course, based on your income and ability to repay and some other things. But you will qualify for the best terms and best rates, almost certainly. So it's up to you. What I tell people is, if you are a type A personality who's trying to chase that so-called perfect score, go for it. You will probably get more gray hair than I have trying to get there, because it's very difficult to do and won't last when you get there anyway, because something will change. But if you are doing the right things, which you must be to have a 793 score, keep doing those things. Your scores will improve a little over time and with time if you keep doing the things you're doing, and it will get better. So right now, I think there are more important things to worry about for most of us than increasing our credit scores a few points. Chasing 800 might be a nice distraction, but it's not essential, if you keep doing the right things with your credit. So, and it sounds like you are. Sometimes they want you in debt so they can repossess the assets and you waste all your payments. Actually, Einstein Mastermind, that's not true. If they do not want to have to go through the process of repossession, that's expensive. It creates legal issues. It's not an easy thing to do. They would much rather make a loan to someone who's going to pay off that item, probably a car, whatever it might be, and everybody be happy because they're making money. They don't have any expense. They don't have to go to trouble of going through the process of first trying to collect and notification and all of the record keeping, and then have to go get the vehicle, and then they're stuck with a vehicle they have to sell. And if they then sell it and it doesn't sell for what you owe or owed still, now they have to go, they're going to send you a 1099 form, which means that they treat it as income for you. They don't. The federal government treats it as income, the difference in what you owe and what they sold the vehicle for, using a vehicle as an example. And so then you have to pay taxes on that amount. So it's a huge cost for a lender to have to go through that process. They don't want to do that. They want to make sure that they're making loans to people who are going to repay them as agreed. But depending on your particular risk, and that's what they're trying to figure out with credit reports and scores, is what's the likelihood a person will repay us as agreed. And the higher the risk, the more that they typically will charge, because that offsets their risk and the risk of loss. I mean, that's fundamentally how it works. So they don't want to make loans and then have to go repossess things and pay the repossession company and their share. No, they don't. Jason and Keith, thanks for joining. How long does a credit settlement stay on your report? So Fred Rostar 8, when an account is reported as settled, that's considered what we call a final status. So what that means is the account has probably been delinquent or late, so it has late payments. And you've gone to that lender and said, if I pay a certain amount off, will you consider it paid in full? And so they'll say, yes, if you pay X percentage of what's owed, we'll report the account as settled. And it says settled for less than originally agreed. That account will remain 7 years from the original delinquency date of the account, after which it was never again current. So that gets a little confusing. But what it really means is, if, for example, your first late payment is today and you never catch up, 7 years from today, that account will fall off of your credit report. Settled just means that you no longer have to make payments on it. So it's settled or settled for less than originally agreed. It means you did not repay the full debt that's owed. You'll see that with collection accounts too. They'll report the collection is settled. Same thing, collection accounts get deleted at the same time as the original debt. So it's really 7 years from the date you became late and never caught up again. So settled doesn't change that. That's just a status saying the bank is reporting it as settled, and you aren't making any more payments and aren't required to. So that's how that works. People should not be stuck on credit ratings. It's about not having debt. Tasman 87, to a degree, I agree. So, I think people get so obsessed with a number that they make poor overall financial decisions. They should be concerned, and we should all be concerned, me included, and the people who work for Experian, about our credit reports, our credit history. We want to make sure it's accurate. We want to make sure it's complete. We want to make sure we're managing our debts and our credit accounts well, so that they're there to work for us as a financial tool. But the credit score itself just represents the information in that credit report. So I don't worry about my credit scores. It's good to know what they are, especially if I'm planning to go make a purchase and want to finance the purchase. But outside of that, I worry about taking care of my credit report. I worry about managing my credit account so that I'm not carrying debt, and use credit as a financial tool for me. So I agree. Don't obsess over the number. Obsess over making sure that you're making good financial decisions, making good credit decisions, and using it to your advantage, and taking care of that credit report. So kind of agree on that. Beef fried rice. What should I do about my credit cards if I'm laid off from work? Immediately talk to your lenders. Call them. If you go to Experian.com now, we have a link at the top of our page that explains and gives resources on what to do if you're going through job loss or reduced income as a result of coronavirus, COVID-19. And there's a link that says Learn More. It's right at the top of the page in blue print. Click on Learn More. There's a lot of information there. And I'm guessing there's a squirrel running across our back fence about now. Pardon the dogs. When you click on that link, you'll go to a page. You'll find another link that provides a list of creditors, so financial institutions, as well as non-financial institutions and government agencies, with links for all of them to their resources around COVID-19, including contact information, the services they can offer. So really helpful page, reliable information. So go there, click on the lenders that you have. It will tell you how to contact them and should help you be able to get issues resolved as well. So we're trying to maintain a lot of resources and keep them updated so that you can come to Experian and find that information. So Experian.com, right at the very top of the homepage, you'll see a blue sentence that says information about COVID-19 or Experian Resource Center, COVID-19. I can't remember the exact language now. It says Learn More. Click Learn More, and you'll be able to find that information. So talk to them, because they can provide additional resources. So things like forbearance or deferment for your accounts, which means no late payments would be reported while you're in forbearance or deferment. Can we boost by showing paid cell phone bills with a bank credit card, or is it still only with a bank account? I believe you can use credit cards now. So just learned that a few days ago. But if you go to Experian.com/boost and follow the instructions to enroll, it will walk you through that process. And certainly, if you're paying through a bank account, checking account, savings account for your cell phone or your utilities, natural gas, water, electricity, cable television, so on, you can have those accounts reported to us. I've actually heard from people, and I hadn't thought about it, oddly, but people have contacted me and said, hey, we went through Boost and it's helping improve my scores as we're going through this and helps bolster them. So might be a great tool. It's a free resource. And it's permission-based, so check that out, and it might be helpful to you. And the instructions will tell you exactly what you need to do there. Welcome. Michelle, what's up? Good to see you guys. I was trying to say you can contact your creditors, and they will definitely work with you. Yeah, and now especially. And the CARES Act requires certain actions, so it can require some patience. Yeah, I smile, because we call and they're going to have extended wait times, maybe very extended wait times, but be patient, because I know that they do want to work with their customers. We may be experiencing that as well as if you contact us, just because of the volumes we're seeing. It's great to finally, not finally, but it's great for people to want to talk to us. It's just a challenge in a situation like this where everybody suddenly wants to talk to you, makes it a little hard. But we're all doing our best. I can promise you that. This is why people should have emergency funds. Tasman 87, you're stealing all my talking points. But true, now is the time, and I was on an interview earlier today, and I said exactly that. Now is the time to tap into that emergency fund if you need it. But the majority of people don't, unfortunately. So, if you have an emergency fund, now's the time to use it. You're absolutely right. Don't know about 90% of people misusing their stimulus checks. I hope not. I hope people use them to pay what they're intended for. So, the stimulus check should be used to pay rent, to buy food, to pay for medical supplies that you need, and make sure that you're putting a roof over your head, clothes on your back, food on the table, taking care of yourself and your family first and foremost, and not to go out and buy stuff. So I hope you're wrong about that one. Are credit card companies being more lenient with applicants during this difficult period? Yeah, and Blocos 03. Yes, I mean, I think that, and they are offering a number of different options for people in repayment. They, as I said, from our perspective, the credit reporting industry with Experian, TransUnion, Equifax have in place a crisis response plan that works with lenders. We provide special, for lack of a better term, codes that they can report accounts in forbearance or deferment, so that we know that they're tied to a natural or declared disaster, so that once it's in forbearance, it won't affect your credit histories negatively. We have a statement that says this consumer is affected by a natural or declared disaster that lenders can report on your behalf, also help protect your credit history. So you talk to them about all of those things and all of the options they have. JCJ 463, is 750 a good score? Yes, it is. 750 is kind of that number that once have 750 or higher, in most cases, you're going to qualify for the best terms and best rates, or very nearly so. That's kind of the prime, kind of marker. 700 and above is considered good, but you may not qualify for the best terms and best rates. At 750 and over, you tend to start to fall into that category. Certainly above that, you're going to begin to qualify. So, and get the credit you need. So yeah, Tasmania said anything 7 or above, so 700 above. How long does it take for credit card settlements to come off your report? Yeah, so Federal Straight, we kind of answer that. So if you settle a credit card account and negotiate settlement, the account will be reported as settled, or settled for less than originally agreed. That's going to stay in your report 7 years from the original delinquency date of that account. If it wasn't delinquent, which would be very rare, if you don't have late payments and issues with repayment, if you settle the account, it's going to be 7 years from the date report is settled, which is the final status of that account. Why are most loans predatory loans in disguise of decent offers? Phalanx 7, not quite sure I understand that question. There are certainly predatory loans and predatory agreements, and we're seeing them come out, which is very disconcerting. Telling people there was a predatory credit repair firm that popped up on our community social media site saying, I have a friend, and that's the first clue. I have a friend who, if you pay them, can get accurate information removed from your credit report. There's a lot of things wrong with that statement. And they're trying to prey on the fears that people have right now. And there's a couple of things. One, if somebody says they have a friend who, and you're not working with them directly, first sign of trouble generally. Second, if it's a credit repair firm, they cannot ask for money up front. They have to provide a written contract. They have to fulfill the terms of that contract before they accept any payment from you whatsoever. They have to give you 3 days to withdraw. So if something sounds too good to be true, it almost certainly is. But the point is, know your rights and know what the law says, because these are the times when we're afraid, when we're uncertain, when we have so many things happening in our lives that we're trying to deal with, that the bad actors show up and try to take advantage of those fears and those uncertainties. And so we have to be careful about the information we're provided, about what the steps we take. And so if they're saying, hey, we can get you out of debt, all you have to do is pay us a whole bunch of money, probably not a good sign. If you need help and you're concerned about your credit history, seek good counsel. One of the places that we always talk about is nfcc.org, the National Foundation for Credit Counseling. They're a nonprofit organization with members all around the country. well established, well known, well respected. There are others as well, but make sure you know who you're talking to and working with. But there are people who will come out of the woodwork and offer loans that are usury. And we know about things like title loans and payday loans that have their place in some cases, but also can be predatory. So be aware of those things. So yeah, and I can't speak to specific lenders, but I can tell you what they're doing. So, but if you borrowed against it and didn't repay it as agreed, they're going to charge it off, be reported as a charge off. You need to work with the collection agency. You can't speak to I don't know exactly what happened there, but it would depend on how it's reported in your credit history. If it's reported as a payment that was due, but that was not paid, you maxed it out. I don't know if you did. But then charged off all of it. I'm not sure why or what that means exactly in your situation. But it sounds like if they say charged off, it means they've charged it off as a loss, which means something happened with repayment in relation to the contracts that they had. And so you can dispute the information, work with them. But if you pay the amount in full, it should say paid in full, which is better than not. But if it's charged off, sold to collection, work with the collection agency. Make sure you get a copy of your credit report. Know who is the current owner of that debt, because it may not be PayPal. And while the creditor may take payment, the legal owner would be the collection agency, and so that's who the payments need to go to. So be aware of that too. If you lose your job during this time, how can the big three help you move forward when we recover? So me and Michelle, we're doing a lot of things right now to help position people better. One, we're working, as I said, with our lenders. We have a crisis plan that we've implemented weeks ago that allow lenders to report information for accounts as in forbearance or deferment, which means no negative information would appear in the report. Experian strongly supports the CARES Act, which says lenders, if they're reporting information, must do so in a way that doesn't negatively affect their credit history. So we should be able to have a credit history that's strong and intact and not negatively affected if you are impacted by COVID-19 and job loss or income reduction as a result. So that's sort of step one. And two, we also are, if you're applying for utilities or rent or some of those things, we're making them all soft inquiries, so they will have no effect on credit scores. So you don't have to worry about those kinds of things. And so we're doing a number of things to make sure that people's credit history is protected as we go through this. At the same time, not everybody will be negatively affected. A lot of us are still working, still making our regular income. And so we're still responsible to make those payments on time. And so lenders should report those payments as accurately as possible. So if you're making the payments on time, you're working, not affected. That's what it should be. And so we're working to make sure that people who are impacted are protected, that their credit histories can remain strong and unaffected, but at the same time, make sure that the information we have is accurate, so that when we come out of this and we start firing up our economic engine again, lenders can continue to make good financial or good lending decisions, good risk decisions, and other businesses as well, so that we get back on our feet and are strong again. So doing a number of things. How far back can you boost? So Blocko's 3003. We go back 24 months when you enroll in Boost, so 2 years right away. Our credit card lenders halting approvals during this time. DFRAZ, I don't think so. And, they wouldn't necessarily. They may make their approval criteria more strict. But now I know that they're still available. You can still apply. Things are continuing to work as much as normal as possible. So they are still approving. What's the situation with coronavirus in the USA, good or bad? Thanks for me, bad. It's just like everywhere else in the world. We're doing everything, I think, pretty much that we can. We're social distancing. We're sheltering at home or in place, whatever term the particular state or government's using. But we're still seeing infections. We're still seeing, unfortunately, deaths. So it's bad here too. So thoughts with everybody, and we're all in this together, and that's why we're here. And part of why I'm here is to make sure we're sharing information to help as much as we can. FICO 10. What's the best way to manage the changes that are coming? Me, Michelle. Keep doing what you're doing. So I smile because there's a lot being said about FICO 10. It's a standard upgrade, more or less, that we see regularly. FICO is always looking at their credit scoring systems and the marketplace and adapting them to make sure that they accurately reflect the risk that's associated with credit histories and the way the market is behaving. So we're the market, the way we're borrowing and repaying. So they change. So that's why there's FICO 8, FICO 9. It goes all the way back to FICO 2. I think is still in use in some of the mortgage world. So lots of them out there. Advantage Score 3.0, 4.0, competitor FICO. You see different versions. So they're still looking at the same information. They still are looking at the information in your credit report and credit history. So if you're taking care of your credit history, doing those basic things, pay your bills on time, keep your balances low, be consistent, your scores are going to be fine, whether it's a FICO 8, which is now the most commonly used score, or FICO 10, that's going to be implemented over the next few years, or FICO 10T, which incorporates, the T stands for trended data, so they're looking at behavior over time, not just as a snapshot in time. So again, having good credit scores is really kind of boring because it's all about being consistent, doing the same things over and over, paying those bills on time, keeping your balances low, not applying for credit unless you need it. And that's kind of the way you have exciting credit scores, is to be a boring credit user. But so it's kind of, just do those common sense things. Scores will be fine. You might see small changes. The biggest effects from everything I've seen, read, heard, is that there may be at the outside edges. So people with the highest scores or with the very lowest scores might see some fluctuation. People in the middle, like most people are, probably not going to see much change. So in terms of scores, keep doing the same things. So, and boring answer, but that's the best. That's what it. The most attractive credit people are the most boring people, because we just do the same thing over and over and over. Write off but paid entire debt later, back in 2015. 22, when I don't have this anymore. Harp-a-larp. If it's written off in 2015, so it'll be 7 years, probably a little less than that. So 2015 would be 2021. 2022, not a good math guy today. 2022. So, and you said it right in that, sorry. So 2022, but it will probably be a little sooner than that, because the time frame starts with the original delinquency of the debt, which is usually 6 months or so prior to the write-off or charge-off. So you're going to be in that range, and then it would fall off the credit report. And there are really good questions today. I have a question. I heard that many Americans won't get the stimulus check. How can they ran out of sentence? So how can I be sure? And and I'm not an expert in the stimulus payouts. We do have information on our website. So if you search Experian CARES Act or Experian stimulus payments, you'll find our response from our education teams about exactly what to look for. But not everyone will. It's tied to your Social Security number and paying taxes. So you need to look at, did you pay taxes? Do you have a Social Security number? That's going to be step one. And then it's dependent on income levels and dependency on, so if you are a dependent on another adult who paid taxes, you may not receive a check, and things of that sort. My mortgage was in foreclosure but settled in bankruptcy. Will my credit score take another hit? No, I mean, the bankruptcy is going to be the overarching issue there. It's already in foreclosure. It's already had that impact. Bankruptcy is going to be the significant factor. It will bring your scores down further, almost certainly. And Sissy Yak J, thanks for joining. If your house is sold at a short sale. So, Blocos 03, another interesting thing. Short sale, the term short sale does not appear in a credit report. What you would see is settled, because short sale is a term that was created to describe selling a house for less than you owe on the mortgage. Settle the mortgage. An agreement you reach with your lender. So that's what you would see in your credit report. So you would see, you have a complicated account. You would have a mortgage that's foreclosed, maybe short sale thereafter, and then included in bankruptcy. So you'd see lots of information about that account. So I'm going to scroll on here. A soft belly rub, love that name. My little dog loves belly rubs. Michelle, great, and thank you all. So running a little bit long, but love all the questions. Thank you all for being here and part of the chat. We are continuing to do more and more, as much as we possibly can, to communicate and connect with all of you. We want to share information. If you're just joining, I'm about to sign off. I'm Rod Griffin, Senior Director of Consumer Education and Advocacy for Experian. This is Credit Chat. I'm here 1:30 Central, 2:30 Eastern on Tuesdays and Thursdays on Periscope. We'll be live on Twitter tomorrow on our Credit Chat. And we'll be talking about how to talk to kids about COVID-19 and saving, which is going to be an interesting conversation and a difficult one these days, with all the things that are going on. So join us for that. And we've launched a Facebook Live, so Credit Chat Live on Fridays, 11:30 Central. Hope you can join us there as well. You can learn more about all of these outreach programs and talk with us, ask questions, get more information. Visit ex.pn/credit chat to learn more about all of them. Thank you all for all of the fantastic questions. Credit Chat tomorrow, 2 o'clock Central, 3 o'clock Eastern. I think that's noon Pacific on Twitter. So ex.pn/credit chat. Thank you all for being here and being part of the conversation. Hope to see you tomorrow and Thursday and Friday. And please, everybody, stay well and stay safe. We'll talk to you very soon.